Good morning, traders. Richard and a quick Ichimoku cloud chart market review of Palantir using the Fulgent AI engine that sits on the Metastock platform. We can see this Fulgent AI engine gives us plenty of volatility breakout trading opportunities in Palantir, and let's go and review the most recent one. So far so good. Had a nice relief rally rebound here. Below the Ichimoku cloud. The problem here, price action below the cloud is still bearish, but the reason why we took this trade is when price action becomes too far extended to the downside, then there's kind of mean reversion taking place. So we had a nice two volatility breakout signals here to the upside. Now it's getting close to the resistance zone. We can see how that moving average there provides a bit of resistance as well as the top end of the front end of the Ichimoku cloud. So keep a very close eye out on how Palantir is going to test this zone between these moving averages and the bottom end and top end of the Ichimoku cloud. So these are the upside risk and resistance targets on the daily Ichimoku cloud. Turning to the 4-hour intraday one, let me just move this up a little bit. We can see we had a couple of volatility breakout signals here, but these signals below the cloud is ultimately counter trend because price action below the cloud is bearish. But once these signals get too far away from the bottom end of the cloud, then we take these high probability trades, not necessarily the ones that's just starting when the market enters bearish territory. Yeah, Palantir entered bearish territory when it sliced through the bottom end of the cloud, so there were plenty of short selling opportunities to the downside. Once the price action became too far extended from the bottom end of the cloud, we expect mean reversion, and then that's why the last volatility breakout trade was quite successful here so far. And then we also had a Ichimoku cloud chart buy signal in and around this zone here. Cloud chart cross buy signal, and now it's fighting the resistance at the top end of the Ichimoku cloud on the 4-hour. Key levels to watch out for is this zone here. That's in there. The 157, 158 zone basically, and that zone. So now when we get this breakout past these resistance levels, and if we get maybe a bit of resistance from that 158 zone, it can come back and test the top end of the Ichimoku cloud, this zone here. So as long as price action stays above this zone here, then the rally should be okay on the 4-hour. We need to see a clear breakout for the 4-hour chart to be back in bullish territory. There's downside risk here in terms of consolidation to the standard line as well as the bottom end of the cloud. So these are the downside support and downside risk targets on the 4-hour Ichimoku cloud, but we need to see a clear breakout on the 4-hour back above the top end of the cloud to be bullish on Palantir. So both the 4-hour and the daily Ichimoku cloud did offer some really good trading opportunities. Next up, if we take a deep dive into the fundamentals of Palantir and we look at the StarMine models, which uses thousands and thousands of data points to come up with these rankings, we can see the price momentum score is quite high, so we've got a sufficient price momentum. So we do expect some outperformance in the stock. The ARM score, the analyst revision score, is 100, meaning the analysts have been upgrading their numbers and improving guidance. The key factor to remember is the earnings quality rank is a 98 percentile, which tells you that if you dive deep into the balance sheet and looking at what and the income statement, what actually drives the earnings and how does that affect the future earnings, etc. Quite a lot of rankings analysis goes into that, but nevertheless it's a very nice high ranking of 98 percentile rank. Not much credit score risk there. The company's got sufficient money. The only problem is the relative valuation and intrinsic valuation is quite low there in terms of the ranking, so it tells you the stock's incredibly expensive there, but does have technology leadership in terms of what it does. Going into the March quarter 2026, the predicted surprise is 1.4%. Do expect the analysts do expect the stock to beat on the earnings basis there, so keep that in mind if you're doing any options play closer to the earnings release season. But so far so good. Very strong performance. StarMine rankings looking quite good. The earnings quality rank is good. There's just a combined alpha model and valuation and momentum score, which is not particularly favorable. Smart holdings, short interest, and insider rankings also not particularly healthy on that side of the coin. So there's some room for improvement on that basis. But closing remarks, back to the stock, looking very close to see what is going to be the price action in and around this resistance zone, and if we're going to get a breakout past that, which would trigger another cloud chart buy signal as it breaks back into bullish territory. So critical week ahead of it. Until next time, thank you for watching and happy cloud chart and AI trading. Bye for now.